Let's just jump right into it. The crypto market just got rocked by one of the biggest sell-offs we've seen in a long, long time. And right at the heart of it all, Bitcoin. So what on earth just happened? And more importantly, what are traders looking at right now? Let's break it all down.
First things first, we need to get our heads around the sheer scale of this thing. This wasn't just, a dip. We are talking about a historic, system-wide wipeout that sent some serious shockwaves through the entire crypto space.
The headline number is, well, it's pretty staggering. In just 24 hours, $19.31 billion worth of leveraged positions got absolutely vaporized. Now, what does that mean? It means traders were betting with borrowed money, and when the market turned south, bam, all those positions were forced sold, liquidated.
And it's so important to remember that behind that massive number, you've got real people. We're talking about over 1.6 million individual traders who got completely wiped out. All that borrowed capital was just flushed out of the system in what's being called a historic deleveraging event.
Now check this out, because this shows just how widespread the pain was. Yeah, Bitcoin led the way, no surprise there, with over $5 billion in liquidations. But look, Ethereum was right behind it, and the other cryptos, they added up to a whopping $9.5 billion. This wasn't a Bitcoin problem. This was a market-wide cleansing.
And the fallout from all this? Oh, it was immediate. Confidence just evaporated. The total crypto market cap took a nosedive, losing almost 9% of its value in a flash. And the crypto fear and greed index? It plunged down to 35, landing it squarely in fear territory.
Okay, so let's zoom in a bit. Let's focus on the main character in this whole drama, Bitcoin. We're going to look at 3 key numbers that really tell the story of its chaotic tumble.
So first up, the price itself. Bitcoin dropped almost 7% in a single day, a huge move that brought its price down to $112,759.
And of course, when the price drops like that, its total value follows. Bitcoin's market cap sank by nearly the same percentage, landing at $2.24 trillion. That's a pretty significant hit for the world's biggest digital asset.
But now, this is where the story gets really wild. While the price was crashing, what was happening with trading activity? It was exploding. Volume shot up by an unbelievable 141%, hitting almost $180 billion. So this wasn't some quiet sell-off. This was a frantic, high-volume panic.
So that's the what. We've seen the damage. But the really big question is, why? Why did this happen now? Well, it wasn't random. It was a chain reaction, kind of like a billion-dollar domino effect.
You could really call it a perfect storm. It all kicked off with some panic in the broader global markets. That fear then spilled over into a crypto market that was, let's be honest, full of traders with way too much leverage. So when prices started to slip, it triggered a massive cascade of forced selling, which led to the historic liquidation we just talked about.
So what was that initial spark? What was the first domino to fall? Well, according to the reports, it was President Trump's aggressive new talk about Chinese tariffs. That news spoke to the traditional markets, stocks and bonds, and that fear just bled right over into crypto, kicking off the whole chain reaction.
And that brings us to right now. After a crash this big, the one question on everyone's mind is, what happens next? So let's look at the key technical levels, the lines in the sand that every single Bitcoin trader is watching.
During that plunge, Bitcoin's price just smashed right through the $113,000 mark. That was a huge psychological support level. And it didn't just break it. It kept falling all the way down to a 24-hour low of about $104,500.
Now, to understand the most important level right now, we got to quickly talk about a tool traders use called Fibonacci retracement. Don't worry, it sounds complicated, but it's not. All it is a way for traders to identify potential floors where a falling price might finally bounce. Think of it like drawing the most likely battle lines on a chart.
And this table here lays out those battle lines perfectly. You can see the support level that was broken at 113K. You can see the absolute bottom it hit near 104K. But look at that last line. That's the one, the critical defense level at $109,200. That is the key Fibonacci level that traders believe has to hold to stop another catastrophic drop. So that leaves us with the billion-dollar question, doesn't it? After one of the biggest crashes in its history, Bitcoin is now defending this incredibly critical line in the sand. So, is this the bottom? Are we good? Or is this just a quick pause before the next round of chaos begins?
The entire market is holding its breath to find out.